Ladies and gentlemen, good day and welcome to the Indoco Remedies Limited Q4 FY23 earnings conference call hosted by JM Financial. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Cinderella Carvalho from JM Financial. Thank you, and over to you, ma'am.
Thanks, Zico. Good afternoon, everyone. I'm Cinderella Carvalho. On behalf of JM Financial, welcome you all on the Q4 FY23 earnings call of Indoco Remedies. At the outset, I thank the management of Indoco Remedies for giving us this opportunity to host the call. I'm looking forward to have an insightful interaction on the earnings for the management. Today from the management team, we have with us Ms. Aditi Manandikar, Managing Director, Mr. Sandeep Bambolkar, Joint Managing Director, Mr. Pramod Khorpade, Chief Financial Officer. I now hand over the call to the management for the opening remarks. Over to you, Ms. Aditi.
Thank you, Cinderella, and thank you all of you for joining us this afternoon. The year 2022-23 has been an eventful year for us at Indoco. Across businesses and geographies at Indoco, several new initiatives are underway to make the company future ready. In the domestic space, several positives, including a spectacular new launch performance and a stellar growth by Cyclopam, our key brand, were unable to overcome the high base effect of acute category COVID product sales of last year. Consequently, we ended the year on a flat note. New introductions have generated sales in excess of 30 crore this year and now contribute close to 2.6% of our India sales. Dropizin, Noxa and Subitral, each at 10, 9 and 8 crores, have been featured in the top 20 new launches this year. The newest launch, Minas, is the first time in India launch of an antifungal derma product and has already clocked 1 crore in 40 days of launch. Almost all top 20 brands for the company are showing robust double-digit prescription growth, and this augurs well for future sales. 2 of our brands feature amongst the top 300 brands in the IPM, and Cyclopam has jumped 27 ranks this year in the list. We now have 3 brands of over 100 crore and another 4 of between 50 to 100 crore. The focus at Indoco is to make big brands bigger while we succeed with our new launches. While the company is ranked 27th or 28th in the retail audit, depending on season, our rank in prescription audit is 20th. There is therefore an urgent need to get more out of our prescriptions, especially for those products which have an OTX element in their sales. Accordingly, this year we have launched a direct-to-consumer division primarily focusing on a few dental products. Digital marketing on social media has also begun for these products. These initiatives will allow us to create better product availability and to keep our patients better informed of the therapy choices they have. Now coming to international business. As some of you are already aware, the warning letter on Plant 1 has been lifted. The EIR for the plant was received and the inspection is classified as VAI. Plant 1 capacity is now available for supply of products to US. We expect quick approvals of products already filed from this site and will also now have an opportunity to file more products from here for the US market. In Europe this year, key highlights include garnering a 30% market share for lacosamide tablets and a 20% market share for lacosamide injection, both of which were first generics in the market. In Germany, our allopurinol has 70% market share, thanks to a second year in a row grant of AOK tender. Across the company, several initiatives where automation is being looked at to accelerate performance are being considered. Our field sales officers in India have been given iPads for detailing to doctors. This is expected to improve both effectiveness and efficiency in the doctor chamber. Pan India, our SAP S4HANA, DMS or the document management system, and TrackWise are some of the successful implementations resulting in better systems and enhanced effectiveness and speed. Many such other interventions, especially in manufacturing operations, are also on the anvil. Now, beyond business. Indoco recently successfully completed the SMETA or SEDEX Members Ethical Trade Audit. The SEDEX Members Ethical Trade Audit methodology focuses on 4 pillars: labor standards, health and safety, environmental performance, and business ethics. The successful SMETA 4-pillar audit at Indoco Goa Plant 1 showcases the company's unwavering commitment to responsible manufacturing practices. Indoco's dedication to labor standards, health and safety, environmental performance, and business ethics has earned it recognition as a socially responsible organization. Earlier this year, we entered into a share purchase and shareholders agreement along with the power purchase agreement to acquire 26% stake each in Concall Wind Energy Private Limited and Jalanstar Wind Energy Private Limited for setting up solar power plants at Akkalkot, Solapur district in Maharashtra. This is in compliance with the regulatory requirements for being a captive user under the Indian electricity laws. Protecting our environment is of utmost importance to us, and it is our constant endeavor to conserve and promote green energy. This arrangement will help us save electricity costs on a recurring basis at our R&D center at Navi Mumbai as well as at API plant at Patalganga. The company's core corporate responsibility is to practice its corporate values through a commitment to grow in a socially and environmentally responsibly way while meeting the interests of its stakeholders. We are exploring many such other energy saving opportunities at our other sites as well. That is all from me. I now hand over the call to Mr. Sandeep Bambolkar, Joint MD, to take you through the financials of Q4 and full year.
Thank you, Aditi. Good afternoon, all the participants. Hope you all are doing fine. Let me first begin with the business highlights. Net revenues of the company for the fourth quarter grew by 6.9% at rupees 428 crores compared to rupees 400.3 crore. For the year ended March 23, revenues grew by 9% at rupees 1,638 crores as against rupees 1,502 crores. EBITDA to net sales for the quarter is 15% at rupees 64.2 crore compared to 20.1% at rupees 80 crores. EBITDA for the year is at 17.4% at rupees 284.9 crores compared to 21.8% at rupees 327 crore. The year 2023-24 witnessed business activities swinging back into action, very much similar to pre-COVID times, wherein business travel, marketing expenses, business promotion, etc. have increased considerably as compared to previous year. Profit after tax to net sales for the quarter is 6.9% at rupees 29.7 crore compared to 8.9% at rupees 35.6 crore. For the year, PAT is 8.7% at rupees 142.8 crore compared to 9.9% at rupees 149.2 crore. EPS is rupees 2.75 for the quarter compared to 4.38, and for the year EPS stands at 15.34 compared to 16.77. Our solid dosage facility at Goa, that is Plant 1, has received the Establishment Investigation Report with Voluntary Action Initiated status from the US FDA. We have also forayed into digital marketing space for our domestic business with focus on select dental portfolio alongside traditional and ethical marketing strategies. New product launches in domestic market, Ninaf cream in dermatology and Lady Boon in hormonal segment have provided substantial growth in domestic revenue generation. Now on to the Indian pharma industry. The Indian pharma market is valued at rupees 44,138 crores and has registered a growth of 11% during the fourth quarter of FY22-23 against similar fourth quarter of last year. During this quarter, Indoco has registered sales of rupees 299 crores with a growth of 13.6%. In the IPM, Indoco ranks at 27th position in Q4 FY23 with a market share of 0.68%. The source is AVAX for April to March 23. Domestic formulation business. Revenues from domestic formulation business for the quarter degrew by 4.3% at rupees 184.5 crores compared to rupees 192.9 crore. Major therapeutic segments, namely urology, dermatology and gastrointestinal, performed well during the quarter as compared to the previous corresponding quarter of last financial year. For the year, revenues degrew by 0.8% at rupees 796.7 crores against rupees 803.1 crores. Now on to the international formulation front. Revenues from international formulation business witnessed a growth of 14.1% at rupees 216 crore compared to rupees 189.5 crore. For the year, revenues grew by 21.5% at rupees 753.7 crores as against rupees 620.5 crore. Revenues from reg markets for the quarter grew by 5.3% at rupees 163.4 crore against rupees 155.2 crore. For the year, revenues grew by 21.2% at rupees 610.5 crore against rupees 503.6 crore. Revenues from US business for the quarter grew by 2.6% at rupees 71.3 crore as against rupees 69.6 crore. And for the year, revenues grew by 25% at rupees 265.9 crore as against rupees 212.7 crore. The Europe revenues for the quarter grew by 3% at rupees 82.1 crore against rupees 79.7 crore for the same quarter last year. And for the year, revenues grew by 17.5% at rupees 320.5 crores as against rupees 272.8 crores. South Africa, Australia, New Zealand for the quarter grew by 70% at rupees 10 crores against rupees 5.9 crore. And for the year, the revenues grew by 33.6% at rupees 24 crore against rupees 18 crore. The emerging markets for the quarter grew by 53.6% at rupees 52.8 crore against rupees 34.3 crore. And for the year, the revenues grew by 22.5% at rupees 143 crore against rupees 117 crore. The API business for the quarter grew by 74.3% at rupees 22.8 crore against rupees 13.1 crore. And for the year, the revenues grew by 11.5% at rupees 71 crore against rupees 63 crore. Revenues from AnaCipher CRO and Indoco Analytical Solutions for the quarter recorded a sale of 4.5 crore against 4.8 crore, and for the year 17 crore against 15.7 crore. That's all about the business highlights for the fourth quarter and the annual highlights. I now request questions from all the participants. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. In order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 1 or 2 questions per participant. Should you have a follow-up question, we would request you to rejoin the queue. Thank you. Our first question is from the line of Mitesh Shah from Nirmal Bang Securities. Please go ahead.
Thanks for taking my questions. My question is regarding domestic market. What would be the growth excluding the COVID for quarter and the year end? Also, the another question, I just take all the questions together. US also we list our guidance of 285 crore. That what is the reason for this and what would be the expectations? And also on the margin front, the other expenditure was a bit high. Can you explain for that as well?
Yeah, I'll just take the first question. We'll go one by one. I think your question was about the COVID impact. If you recall from my earlier calls, I had estimated correctly, I think, that ATM and Carval Plus together will impact us to the extent of around 40 crore. So if you look at those two products alone, the impact is close to 45 crore on an annual basis. This has been partly recovered by around 15 crore coming incrementally from the new launches this year. Another 14 crore coming from Cyclopam, and the rest of the 10 crore has come from other brands. So it was the negative impact of the COVID products which did not allow us to grow. Coming to your second question, I think on US markets and guidance, I think Mr. Sandeep would like to answer that.
Yeah. Coming to the US market, you're right, we had guided for between 280 and 285 crores. However, you are aware that Plant 1 had, the warning letter which has been lifted subsequently. So now we will be in a position to ship existing products from Plant 3 into Plant 1 and ship it to US. So capacity will no longer be a constraint, and henceforth, shipments will be very, very regular, and hence there won't be any hiccups in future.
And what about the other expenditure?
Yeah, other expenditure for the year, for the
quarter.
Yeah. The heads which are, extraordinarily high are advertising and sales promotion, repairs, traveling, and legal and professional. Of these, legal and professional and traveling is small, but legal and professional and repairs is definitely not a one-time thing, and we do not expect such high amounts going forward. Regarding advertising and sales promotion, it is some of it, especially related to India business, is in sync with growth of sales. So last year we had done very, very good, sales in India business, and that's why the advertising and sales promotion for this year has come high. The coming year completed, India business has not done very well, so I don't expect this head in the next year to be so much higher. Does that answer your question?
Got it. Thanks for my questions. I have a few more. I will come back on you.
Thank you. Our next question is from the line of Rashmi Shetty from Dolat Capital. Please go ahead.
Yeah, thanks for the opportunity. Ma'am, could you give us the quantum, what was your, how much was your legal and professional one-time charges included in the other expenses? And what was this advertising and marketing sales related to the domestic business, which is included in other expenses, which I believe would be recurring in nature every quarter, right? So if you can give the quantum, it would be helpful for us, to model in the future.
Yeah, Rashmi, Pramod here. So,
yeah.
as Madam explained, the legal and professional is close to about 5 crore. So out of that, almost about 90 to 95% is a one-time cost, which is not a recurring in nature as such. Second is about the sales promotion activities. Out of the sales promotion activities, certain portion is basically on the strategic initiatives in terms of going for a different kind of models. So again, that component becomes a one kind of one-time cost, while others are, I would say, investment for the future revenues. So we have, as as per accounting standard, we have to take the cost in this particular period, while revenues will follow in following quarters.
Okay. And what would be that amount for this investment related to the domestic business?
In terms of value, of course, we don't bifurcate that whether it is a one-time cost or a recurring. But a large component of this, close to about, as I said, in terms of percentage, is investment for the future business.
Got it.
Take 75 to 80% of problem.
Understood. And again, on the US business, have you booked any profit share from benzolamide and Combigan in this quarter?
Yes.
And what was that amount and where was it sitting?
So it's a part of our total sales or revenue.
Rashmi, as such, it is not separately, it is sitting inside the US sales only.
Totally.
Okay. And what was that amount?
Around 16 crores.
16 crores this quarter.
Yeah.
Okay. And how do we see EBITDA margins in FY24 and 25, given that, our advertising sales promotion cost is also going up, and we have seen that R&D has also picked up during the quarter. So if you can give some guidelines on operating margin front.
Yeah, so Rashmi, we are confident of doing between 18 to 19% EBITDA.
Okay, for FY24.
Yeah.
Okay. And one last question, on India business. Why we see the peers as well as the secondary sales performance, we have seen that this quarter, anti-infective and respiratory has really done well. But when I see Indoco Remedies performance, I understand that there was a high base which is sitting, but still, we have completely shown a negative growth. So how should we look this forward in FY24 and 25? Is it that, we are losing market share in anti-infective and respiratory because of the competition, or this is something was, purely COVID related?
Yeah, Rashmi, thank you for that question. It helps me explain a lot. First and foremost, for the market, what is anti-infective and which is a key molecule for the anti-infectives driving the market is amoxiclav. Whereas for us, our anti-infectives are primarily driven by oxipod, which is cefpodoxime, and azithromycin, which is ATN. So the market that shows an extraordinary high increase in anti-infective sale is from a very different molecule than ours. Secondly, when it comes to respiratory, again, most of the respiratory products that are doing very well are in the anti-asthma and inhalants category. Whereas our respiratory really within Indoco was driven or is driven by Carvol Plus, cough preparations, cough and cold like Febrex Plus. So if you look at us vis-a-vis covered market, we actually get an extraordinary impact of the contribution of Carvol Plus to our segment, because Carvol is 90% of the entire market kind of, okay? So it is not comparable. But I want to bring your attention to another sort of thing. If you actually look at our performance as indicated by AWACS or IQVIA, you will see that we are doing a double-digit growth in India business for the quarter and for that matter for the year also. And you might wonder why the difference between our secondary performance, which is indicated by IQVIA and AWACS, and our internal sales. So the answer to that is this year in the last quarter, typically when you have a lot of field force who are not going to achieve targets, you have a lot of primary sales which get postponed. But at a secondary level, there is no impact of this. So when you look at the growth, when you look at our performance as indicated by IQVIA for the month of March, we were the fastest growing company in the top 30. And for the quarter also, we are in double-digit growth. It simply shows a kind of disconnect between primaries and secondaries. And typically, this is not uncommon in the acute category. So when season comes, you see a lot of primary beyond what the real secondary is. And when the season drops, you see a drop in primary beyond the actual consumption. So these kind of things are there, but they get ironed out generally over a couple of quarters. Does that answer your question?
Okay, ma'am. And finally, what is guidance to give for India business in FY24-25?
So FY24-25 finally I think is free of all COVID issues, I'm hoping. I'm pretty sure now. And looking at the kind of, Yeah, looking at all the, fundamentally all the things that we have done in this period to make the business solid, I'm pretty confident of a minimum of 15% growth.
Okay. Okay, ma'am. Thank you. That's it from my side.
Thank you. Before we take the next question, a reminder to all participants that you may press star and 1 to ask a question. Our next question is from the line of Sudarshan Padmanabhan from JM Financial PMS. Please go ahead.
Yeah, thank you for taking my question. So my question is on the US business. So if I, remove the 16 crores of, profit sharing out and primarily looking at it on a comparable basis on a Q-on-Q basis, so we have seen the US business eroding consistently. I mean, if I'm just looking at a trend. Now with the new capacity in place, I mean, how do we see this part of the business picking up? If you can give some color with respect to, what are the kind of launches or the traction that we can see? And from the current base, what is the kind of growth that one can expect?
Yeah, in US, we have an extremely healthy order book. That's the first point I should tell you. So we are extremely confident of a growth between 25 to 30% this year. That's the second point. Now coming to the products, allopurinol is our product in US which is doing extremely well. And in the current year, we should easily be doing 60 crores with that one single product. The bottleneck was in supplies because it was being supplied from plant 3 in Goa. Now that plant 1 is free of the warning letter, it will be supplied from plant 1 also. With the result that the market will be flooded with supplies from Indoco and more orders will come in. So there's no problem of supplies because there's no bottleneck now in manufacturing capacity. Coming to our injectables and ophthalmics, that is from sterile plant, which is going on in full swing. And our future concentration is on complex injectables, suspension ophthalmics mainly, and niche solids.
Sure. And one bookkeeping question. I mean, last quarter, when we talked about Forex, I mean, I was under the impression that the entire amount, that is basically the difference between, the rupee euro or the rupee pound and the rupee dollar, whatever the depreciation happened between the second quarter and the third quarter would have been completely provided. This quarter, again, we are seeing, some kind of additional provision in the Forex. But when I'm looking at the Forex, there has not been a real change. So what is it that is, driving again the Forex loss? And I mean, is it the end of the Forex loss or do we again continue to see something this time?
Forex loss happens because of, MTM, mark to market. That is conditions beyond our control. And this quarter, the MTM loss has been only 50 lakhs. Last quarter, it was a heavy loss on account of MTM, but not this quarter. And as regards the hedging of the currency is concerned, we are well placed. For example, euro is right now, market is ruling around 89.5, and we have hedged at 93, 93.5. Pound, we have hedged at 105 to 106, and the market is ruling around 102. So hedging-wise, there's no problem at all. This is M to M, mark to market, which is totally beyond our control. But still in this quarter, the loss has been very limited.
Sure. And one final question before I join back the queue. I mean, when I'm looking at the absolute cost between, one quarter, it's third quarter and the fourth quarter, there is about, 25 crores, additional that has basically been accrued in this quarter. I would assume that partially, as you explained, it's one-off, partially it is not one-off. I mean, the investment that you are doing, number one, in terms of digital, I mean, even if I assume that out of this 25, crores, half of it is recurring and half is one-off, on a full year basis, it comes to about 40 odd crores. To absorb this 40 odd crores, you might have to do something like around 50, 60 crores kind of, revenue, given our gross margins of about 70 odd %. So are we looking, number one, to absorb this cost, say, in the next couple of, quarters? I'm just trying to understand, how do we see the margin trajectory absorbing this additional cost over the next 3 to 4 quarters?
Yeah. You have rightly said there are two components. One is about the recurring and second is about the one-time. So if you remove a one-time kind of a nature of cost, then approximately about 5 to 10 crore. That is what the additional cost which we feel that will be recurring on a quarter-on-quarter basis. While there will be incremental sales as we discussed in terms of domestic as well as to some extent certain portion of expenses related to export will be recovered from the incremental sales in export as well. So we are very much confident to recover this extra or incremental cost which is going to be on a recurring basis.
Sure, I have more questions. I'll join back.
Thank you.
Thank you. Our next question is from the line of Nikhil from SIMPL. Please go ahead.
Yeah, hi. Good evening. I hope I'm audible.
Yes.
Hello. Yeah.
Yes.
So my question is on the domestic market. Now, in various discussion, ma'am, you've mentioned that on the legacy portfolio and the newer portfolio that we are launching. Now, if you have to understand the products which we have launched in last 3 years, what percentage of our current business is coming from those, and what is the kind of market share we've achieved in those products, the products we launched in last 3 years?
Yeah. So, as I said earlier, the last 2 years I can give you, because that is how we classify new products. So, a total of 2.5, 2.6% of our sales are now coming from the products we have launched in the last 2 years. In these, happy to share that Noxa, which is Organoxacin cream, we continue to be market leaders despite being the 5th product to be launched in that market. Dropizin, also we are fast gaining market share. And the third product, Subitral, which is a Suba itraconazole, we are very confident with this new launch of Ninaf, which is a Naftifine allylamine antifungal, which works very well with an itraconazole. We are hoping and very sure that both Subitral and Ninaf will continue to do well from here on. So new products definitely have added great value and will continue to add value in the years to come. However, we have a lot of base in key brands. We have stopped calling them legacy because they continue to grow at high numbers. Cyclopam, as I explained earlier, has done very well this year with a 17% growth in primary and around 50% growth in prescriptions. And it is slated to do very well in the coming year as well. Our second large product, Febrex Plus, has again faced the brunt this year of a COVID base from last year when anti-cold medications did exceedingly well. But there is a lot of scope for us to improve on performance of Febrex Plus. The third product, Oxipod, which is a cefpodoxime antibiotic, has recovered from the lull when azithromycin was doing very well. And this year Oxipod has done exceedingly well, and I'm confident it will continue to do well. Other than that, Cital and Cital UTI, both products to be used in summer, one for urinary tract infections and the other for, as a disodium hydrogen citrate for micturition and in summer months. Both these products are doing very well for the company. In fact, if you look at the top 20, and of course I cannot forget the dental products, both the toothpaste, Sensodyne, Sensodyne K, Rexidin M mouthwash, all these products are doing very well. Kidodent is also doing well. So apart from one or two brands, that is ATM, Carval Plus and Febrex Plus, all three sort of recovering from the COVID base. These are the three products not doing well. Otherwise, all our key brands have done well. So I feel very confident going ahead. In addition to that, if you have heard me speak of the direct to consumer, so we are expecting our toothpaste to begin to do better than they are doing currently. Because we will get an impact coming from, from the kind of availability that we are making for our product. Hope that answers your question.
Yeah, thanks for this elaborate answer. But what I'm trying to understand is that in last 2 years, if one follows your call, you spent a lot of energy and investment in growing the domestic business, brought about organizational changes also. If you have to compare our performance of our key brands in the last 2 years, although there is COVID, so let's only focus on 1 year versus what it was in 1920. Have you seen a sea change in the terms of the growth or prescription? So if you can just share some numbers like how is the prescription grown for our top brands post we bringing those organizational changes, sales changes for these brands?
Yeah, so the toothpastes have done very well compared to pre-COVID times. But on some other products, yes, the pre-COVID levels are yet to be completely achieved. I am very confident. Basically, I think you are back of your mind is the flat growth that we have given this year. So as I said, 45 CR almost was impact of the COVID product. But apart from that, certain changes also have been done. If you are aware, we sort of brought 2 of our specialty divisions together, C&D and Focus, into a new division called Synergy. Consequence of that, there has been a letting go of certain products like a tail of brands. So we have been shedding products also as we have gone ahead. What is important is that fundamentally we focus on products which have a future and which can be grown. So apart from 1 or 2 brands, I have no concern for products to go back to their pre-COVID levels. In fact, even a product like Carval Plus, about which we have been discussing for some time now, the setback it has given during COVID, I actually went back and did a kind of an analysis of how it performed pre-COVID. And you'll be surprised that in the year 18-19, it was giving us 2% contribution in Q4 and the sale was 2.6 crore. This year, post-COVID, it is giving us 3% contribution with a sale of 5.67 crore. So all said and done, even Carval Plus has doubled. It has just come down from its 10x levels that it sold during COVID. I hope this answers your question.
Yeah. And secondly, there was some amount of attrition also at the MR level in some specific geographies for which we were working. So how are things there? Are we seeing some improvement or some stabilization?
Some improvement is definitely there, but with certain divisions and some geographies, we continue to have attrition, and we are focusing on efforts to bring that down, including impact of vacancy to come on our businesses. So I feel confident this year, with all our initiatives, we will be able to nullify that impact.
Okay. And last question on the US. Now, if we go through our calls for last 2 years, our guidance and actual reporting, there always is a disappointment which comes up. When would you say that most of the things are now set in place, even considering now the US FDA things and the inspections and everything, where do you believe that now probably we are more set in terms of the infrastructure and ability to meet the demand? How confident you feel that now probably what we see, what the potential of the products are, we would be able to achieve it?
Well, I don't know why you are disappointed. 285 crore is what we had guided, and we did 266. I agree we missed the guidance. We have shown a growth. We have registered a growth of 25% in the US business, which is one of our most profitable businesses. That is the first point. Second point is we have done a number of launches in US, which are profitable for the organization. We have ophthalmic suspensions, we have complex injectables, we have niche products in the US, and this is not the end of it. If you want to know the jump, in 1920, we did 56.5 crore. In 2021, we did 148 crore. In 21-22, we did 212 crore. And in 22-23, we have done 266 crore.
But I partly, maybe if I want to sympathize with you, against guidance, I guess we have to be a little bit cautious now while giving guidances because US is that kind of market. If you are aware of what is happening with many of our peers, I think at Indoco, one thing you can rest upon, we are careful with our product selection and would like to play in this market to make money. So some of our decisions to postpone or not launch products which might result in some kind of a deviation from expected numbers would be guided by some definite business fundamentals. Okay? Coming back to capacity, as I said, up till now we had only one plant giving us solid orals, that was plant 3, and which is also a small capacity. Plant 1, from where we were manufacturing 2 products, while we were supplying products, we were not able to transfer any additional products there. And neither were we getting any new approvals from that site. Plant 1 is today our largest site for solid orals. And that will all now become available for US. I don't commit that in one quarter you will see any kind of big change because it will involve filing, approvals coming in, etc. But I'm very confident by end of 2 quarters you will see a big upside coming from supply happening out of plant 1.
Sure, I'll come back in the queue. Thanks for the elaborate answer.
Thank you. Our next question is from the line of Vishal Manchanda from Systematics. Please go ahead.
Good evening and thanks for the opportunity. Regarding the allopurinol German tender, can you guide when it is up for renewal?
We have just won it for the second time. For the last 2 years we supplied, that was the first time we won the tender. And now from January we have won it for the second time. So for the entire 2023 and entire 2024, Indoco will be the supplier. So it will be up for renewal in January 25.
Okay. And would this be similar quantities as the previous time, or this time around there are larger quantities and the same price?
Larger. The quantities are larger. Last time we averaged 65 crores per year. This time we should average between 75 and 80 crores per year.
Okay. And second one on how many approvals are we expecting in the US during the year?
US approvals, about 3 to 4 in the current year.
And how many of this would be ophthalmic and injectables?
Most of them are ophthalmics.
Okay. And any of these? And would any of these be suspensions?
Yes, at least one.
Okay. And can you talk about the market size for that suspension product?
Not at this stage, because let the launch come closer, then we could talk about it in the second quarter or so.
And could you be kind of how limited competition market is that? Whether it's a 2-player, 3-player market?
Yeah, we'll give you all the details during the second quarter meeting.
Okay. And the emerging market performance was very strong during the quarter. Is that the new base for the business, or there was an exceptional?
Slightly it will average out during the first quarter, but from second quarter onwards you'll see consistent numbers.
Q2 and Q3 were a bit of a lull for emerging this year. So there has been a lot of catching up for some products. I guess that is why Sandeep says that it may not stay on this high, but still it will be better than earlier years.
Okay. Aditi, can you talk about the average price increase that you have taken on our Indian branded portfolio during the year?
Around 5 to 6%.
Okay. And we hope to take the same price increase this year as well?
Yeah.
Okay. And would this come around the second quarter, or you would have already taken that for the year?
We have different products coming up for price rise different times in the year. So each product takes a different time cycle on MAT basis. So it's very difficult. That is how it works to 5 to 6% any given financial year.
Okay. So this would not average for the 12 months. It will only be probably only for 6 or 9 months, that 5 to 6% price increase.
No. I mean, at any given time, you'll have one or the other product taking a price increase. We don't take at one time across all our products. Otherwise, you would have seen the 10%, right?
Got it. Understood.
Yeah.
And just a clarification on the US profit share number. Is that entirely attributable to brinzolamide?
No, not entirely to brinzolamide. In fact, that entire quantity, although we did say around 16, I had to rush to tell you that 2 of those are for Europe and it is 14 coming from US. And if I'm not mistaken, it is spread across at least 2-3 products.
Yes.
Okay. And would this be a recurring quarterly number or would this be a recurring annual number, the 14 crore number from US?
If I remember correctly in previous calls, I said that we will do close to 10 to 12 on a quarter basis. I feel confident to maintain that because for quite a lot of products, we are now keeping IP for ourselves. In that case, we may not license out initially, meaning we may not collect a dossier fee or whatever, and profits may come directly in sale. So we are not actually looking at increasing the amounts coming from profit share from future molecules.
Okay. And just one final one on generic Combigan. Our partners, Teva, has lost market share this quarter. Can you give some color on that?
Remedies Timolol you're talking about. Combigan.
Yes, Combigan.
Yes. Yeah, so we had some challenges to resolve and the resolution will be done by October. So October the supply should begin.
Thank you. Mr. Vishal, may we request that you return to the question queue for follow-up questions as there are several participants waiting for their turn. Thank you. Our next question is from the line of Aditya Khemka from InCred Asset Management. Please go ahead.
Thanks for the opportunity. Aditi, ma'am, average price increase of 5 to 6% in India and ex-COVID, our India business growth is actually 5 to 6%. So zero volume growth?
There has been a volume growth of 1%, Aditya, if you actually want to know.
But that is what we are targeting for? We are satisfied?
I'm sorry?
That is what we are targeting for, 1% volume growth. That is where we should be?
No, this is for the year gone by, I meant.
Yeah. So, I mean, my question is what went wrong or was this the number we are targeting?
We didn't target 1% growth. If you remember my calls clearly, I was pretty positive, at least in the second half of the year, to be able to post a higher single-digit growth. And if you heard my answer in some of the earlier calls, typically with the March performance being what it was, it has caught up with us. If you look at our numbers as per AWACS shows us growing on a YOY basis at least at 12.7%. And for the quarter QOQ, we are -3, but the market is -10. But the market is also -4. So we are going in tandem with what has happened to the market at this time, Aditya. And we were not targeting a 1% growth, certainly not. This year, as I have guided, we will do close to 15%. That is our attempt. And with 5% price rise and maybe 1 or 2% coming from new products, we will have to do the rest of it in terms of volumes only. I can't say any other way, right?
But how do we get there? What will we do different this year compared to what we did last year?
You will see it when it happens, isn't it? Lot of things happening across the organization. And I am very confident, especially in some of the segments where we have key products that we will be able to do exceedingly well.
But ma'am, MR is missing their incentives and therefore not selling in March so that they can sell it in April. I understand those dynamics. But that is something that can be recurring in nature, because if your targets are always 15% and you are always going to achieve 8-10%, MRs are going to miss their incentives and they keep postponing their sales. So somewhere in the organization, the incentives of the MR versus the reality of the market is probably not dawning or not gelling with each other. And that also links to another question which another participant asked on the attrition. So if the MR is going to miss incentives, you will have attrition on your doorstep, right? Which itself is a cancer. So how as a manager, how do you deal with this conundrum?
So the first thing is, of course, to see that the MRs perform. And it is not a year after year phenomena that March happens and people don't achieve and they leave. Last year we had some very good performances coming in, of course buoyed with the COVID season. So sometimes alternate year basis this is seen, but it is being corrected through some very fundamentally corrective measures that are being taken in the organization. If you look at our acute divisions, if you look at the two dental divisions, we have several key products which, have been established very well with very sound prescription growth. And if you see the prescription fundamentals, there is no reasons why primary should not come. But yes, attrition in the field, you understand the dynamics as much as me. When a man goes away, the local stockist probably does not feel very confident placing the next order. We are working out various ways in which we can use our managers to cover these areas so that that kind of a dip is corrected. But operationally, a lot of corrections being brought in, Aditya. I would prefer to speak about these only after the results start coming in.
And which will be beginning first quarter or second quarter, ma'am?
Now, if I have to tell you that this year's first quarter was bad, so my first quarter this year will be good. So if you basis on whether you're looking at growth or actual deliverables, So let us stick to fundamentals. I am very confident. New products will continue to do very well. Key brands will grow. Attrition has come much under control compared to earlier. And several initiatives are being done through regional, learning and OD initiatives to try and bring this under control. These things cannot be timed to say that it will happen in 1 quarter, 2 quarters. But very clearly there is a leverage for us, because even when a division achieves 95% target, we see that around 60% people would have done their targets. So there is a lot of number of people who have to get into sales excellence and give us deliverables. There are a lot of geographies which are not coming up to our expectations. It is not possible for the organization to keep, it is very important in India business to get a decent return per man before you have to put in more people. So we are balancing these things, and I feel very confident that many of the initiatives we have taken will give us returns in the coming year.
And Aditi ma'am, your India business profitability would be in line with peers of your size, right? In line or better or lower? I mean, how do you?
I think in line, given our acute portfolio.
In line with the acute portfolio heavy guys. Right. So that brings me to you, Sandeep sir. If Aditi ma'am's India business is in line with peers, then at the EBITDA level, the contribution of export business is close to nothing, right?
Hey, how can you say that? The US business is profitable.
And what about the Europe and the semi? Because I'm looking at the consolidated EBITDA and I'm just deducting the India business EBITDA from that. There is nothing much left there to show for.
EBITDA depends on number of parameters, and
which are
expenditure shooting up is one of the parameters where EBITDA can go down for any business.
Right. And have you launched the Brinzo, the bigger SKU? I understand from the previous call you said that in Brinzo the smaller SKU was selling, but the larger SKU you were yet to launch. Has that been launched in this quarter?
Yes, just launched.
Just launched as in March or in May?
Yeah, this quarter, I mean the quarter which is going to April.
Oh, so it was launched sometime in April. Right. So in that context, and sorry, before I get to that, Combigan, you said there were some issues and you expect them to resolve by October. What were the issues?
It's technical in nature, so a bit of
manufacturing. Yeah. So it's okay. Manufacturing related, basically.
Related to technical issues, yeah.
Technical. Okay, technicals. So that also brings a slight question mark on the quality of the manufacturing and technical expertise we are owning, right? I mean, we have seen through last 5-6 years, we have gone through 2 warning letters, resolved them. We have had quite a bit of a jump in R&D expenditure. Yet we are accessing in some of our largest products, the Brinzo larger SKU, Combigan opportunity. We are facing execution hiccups. Where do you feel the gap is? Is it manpower? Is it R&D expertise? Is it the quality of manpower at the manufacturing point? Because something is clearly not aligning, right? I mean, some of the largest opportunities, there are slip-ups, which tend to, at least as an outsider, tend to tell me that there is something which is not functioning properly. So have you been able to identify that, and what corrective actions are we taking?
Aditya, let me answer that one by one because you posed lots of questions. I'm a little bit amused to see the kind of deductions you have made because of various issues which have nothing to do with each other. First and foremost, the warning letters at the plant are to do with the quality management system and the compliance and systems at plant and have nothing to do with the product. So I felt in this quarter you would appreciate us for a warning letter being lifted. Instead, you want to remind us about the lapses in our warning letter. Find it a little amusing. But let me come back straight to the manufacturing related problems on Combigan that you may be talking about. You have to understand that on a call like this, we are not able to speak with complete clarity on products which are actually owned by Teva, whatever it might be. Also for these products, there are quality teams of Teva and regulatory teams of Teva sitting on our shoulders and heads, enforcing certain things for us to do, which may not entirely be in our hands. All said and done, I think now that we have enough experience and exposure of sterile products, both ophthalmics, difficult to do ophthalmics, difficult to do injectables, it is not a child's play. And it is a very difficult manufacturing. Yes, where are we? Have we learned? Safe to assure you that we have learned more than any of our peers on what can go wrong, especially matters beyond our control in the regulatory space. If you take ophthalmic products alone, and this I speak of generally and not specifically for any product, from the ring retention in the container closure system that FDA enforced a change upon and made us do batches again and file everything all over again. And each of those products were again owned by Teva and not by us. So we had to go as per their guidances. I think it is a totally different kind of ball game than vanilla manufacturing. So we've had several such issues, but I feel we have still managed to skirt through most of them very effectively. Coming to what is not going right or what is going wrong, typically these products are by very nature initially to be taken in small batch sizes, and batch sizes can only be enhanced later as the volume picks up. Therefore, generally it eats up capacity. That has meant that we've not always been able to supply products on a timely manner, to all geographies, giving US preference over all others. Many of these things are now being streamlined and aligned. Coming to the people managing our sites, you'll be happy to know that today at Indoco, about 5 years ago, we had elevated the plant head position to AVP from GM. This year, we have now got one head sterile and one head solid orals and liquid orals, etc., etc. So as and when expertise or skill sets are needed, we have actually done that. As a company which is very conscious about the backlashes of FDA though, we have been extremely careful about what is being allowed to be manufactured, in what fashion and not. The way I look at it is these 4 or 5 years have been a huge learning for us as a company. And going forward from here on, I'm very confident that we will be able to perform and post a much better performance. You had asked me in one of my earlier calls that if I got XYZ number of observations on solid orals, then how do I expect to do well on sterile? And after that, subsequent to that, I think you know that I got less than half those observations in sterile. So I would be very happy if, let's be very frank and look at things the way they are and not unlessly join the dots which don't need to be joined.
Oh, fair enough, ma'am. As an outsider, these are the questions I had, and obviously the responses are elaborate. Ma'am, have you received the classification for the sterile plant audit that the FDA did, where we got half of those observations?
No. Based on what we got for solid orals, we expect it to be by sometime mid-June.
Mid-June, right. One last question, ma'am. What is our capex plan for FY24 and 25?
Aditya, our capex plan is in line with our last guidance in terms of overall about 125 crore is the capex which we are planning for coming year.
Thank you. We move to the next question. Our next question is from the line of Ajas Lakhani from Unifi Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sandeep, so my question is with regards to the 14 crore profit share. In the last quarter call, you had mentioned that brinzolamide, the dosage which is the smaller, is the one where you were expecting profit shares. And you have mentioned today that the larger dosage is something that you're launching now in the first quarter. And you've mentioned Combigan will come in October. So could you please tell me what contributed to the profit share except for brinzolamide, the old dosage? You said there were 2-3 products.
Yeah, we have not given out names of the products, but in US we are generally following that first option with any partner is profit share for Indoco. So there are 4 or 5 products where we have got profit share, and that is the result of that 14 crores number which you are seeing.
Okay, sir, so then just help me bridge the gap here. So whatever is right now coming in the form of profit shares is the steady state profit shares that you're expecting that will come through FY24 as well on a quarterly basis. On top of this, you will build the brinzolamide, larger dosage strength and Combigan in 24. Is that understanding correct?
Yes.
Okay, and when you are launching brinzolamide now in this quarter, again it will take two quarters for the profit shares to start kicking in, and similarly for Combigan.
Correct.
Okay. And sir, you had last quarter you had spoken about a modified release cardiac product. Is that launched?
No, not yet.
Okay, you had also mentioned about a key product launch that got delayed because of which there was a profit share which was expected in December, which was going to get attuned to April. Is that on course?
Which product, for US market or which one?
Yes, sir. You had mentioned for the US market that there were some key launches through partners which again got delayed, and there were profit shares expected in December, but now you had said that in first quarter they'll come through.
We check our...
Yeah, we'll just check that out
and come back to you.
Okay. And sir, the guidance of... so sir, again, just one last thing which does not... I am not able to triangulate it is, your US revenues X of the profit share, are you saying that there has been a sequential decline because of production not being available? Is that what you've been saying? There's
no decline. I fail to understand where you're seeing the decline.
No, sir. I'm asking that the base business, which is X of the profit share, could you just call out what is that base business number for FY23 and what was the corresponding number for 22?
Yeah, I think you're getting a little confused because there are 2 elements beyond sales. One is what we call dossier income, which is when we license out a product, and the second is what we call profit share. So in this quarter in particular, while we got profit share, there were no out-licensed dossiers because, as I mentioned earlier, we are now keeping much of the dossiers for our own filing. So which is why you are getting confused. So same quarter last year, for instance, we had a very heavy income from Dozier. So it is not as if last time everything that got sold in US was commercial. Okay?
Got it, ma'am. And you had called out this Dozier income last quarter. I think it was closer to the 5-6 crores. Is it similar number that was there in
fourth quarter last year? Dozier income was over 17 crore, which is nil right now.
Thank you. We move to the next question. Our next question is from the line of Vishal Manchanda from Systematics. Please go ahead.
Thanks for the opportunity. On your Europe business, are we targeting more tender wins there? Because you said you're trying for other tenders too. So any guidance there?
The question is not clear.
Mr. Vishal, can I request you to use the app, please?
Hello, am I audible now?
Yes,
clear.
Yes. So on Europe, we were targeting more tenders on new products. So any color there? Are we looking at more tender wins in Europe?
We are going to file the tenders, but the results will come out only in July or August.
Okay. And earlier you had guided about some high value launches that you are making in Europe and about high potency plant that you have added to your manufacturing setup.
Yes. Those products are anytime due for approval, and once we get approval, the business will start.
Okay. So approval is expected this year, FY24, or it can take longer?
Early second quarter, I think, this year.
Any sense on the contribution that we should expect from these launches?
A bit too early. We can talk about it in the second quarter.
Okay. Thank you.
Thank you. That was the last question of our question and answer session. I now hand the conference over to the management for closing comments.
Yeah, thank you all for your numerous questions. It always keeps us on our toes and allows us to elaborate on our strategies and thought process. Thank you very much, and thank you.
Thank you. On behalf of JM Financial, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.